The Iraqi Dinar Today latest news, and welcome back to the channel. Today, we're diving deep into an analysis that has been growing in significance within financial circles and government discussions, the compelling case for a major monetary shift orchestrated by the Central Bank of Iraq, or CBI, potentially unfolding in 2025. For years, the topic of the Iraqi dinar, and a significant currency adjustment, has been a consistent point of discussion, often surrounded by conjecture. However, the current convergence of economic indicators and deliberate policy actions suggests that the internal machinery for a substantial financial change is now moving with unprecedented clarity and coordination. This isn't mere speculation based on online whispers. It's a conclusion drawn from concrete, verifiable data, points that paint a clear picture of strategic preparation for a new financial phase. The foundation of this potential shift is the historic accumulation of foreign currency reserves now held by the Central Bank of Iraq. These reserves are not static. They represent a tremendous increase in the nation's financial strength, having reached a level in the vicinity of $112 billion. This figure is a landmark achievement, showcasing an intentional and prolonged effort by the central bank to fortify its financial defenses. A country's reserves function as a vital economic shield, providing stability to the local currency, underwriting the cost of essential imports, serving as a buffer against global economic volatility, and crucially, granting the CBI the authority and leverage to make significant monetary policy decisions without succumbing to external pressures or vulnerabilities. The sheer magnitude of this reserve level is what distinguishes the current moment from previous periods of discussion. It's a key indicator of fiscal discipline and improved revenue management. Only a few years ago, Iraq's foreign currency reserves were considerably lower, almost half of their current standing. The substantial growth can be attributed to robust oil revenue flows, coupled with more stringent controls over national income and determined efforts to curb financial leakages. When a central bank actively builds up such a massive protective layer, it signals preparation, not just passive management. This buildup suggests readiness for either a major defensive action to protect the economy or, more pertinently given the reform agenda, a strategic monetary transition. This preparation aligns perfectly with the comprehensive economic reforms and digital banking upgrades currently being implemented across Iraq's financial sector. The combination of burgeoning reserves, a push for modernization, and fundamental changes to the banking structure indicates that the reserve accumulation is far from accidental. It is a calculated step in a broader, long-term strategy. The timing of this extensive groundwork is significant, leading many analysts to believe that a structured, key adjustment period is being earmarked for mid-2025. This synergy of financial strength and systematic modernization strongly suggests that the central bank is methodically setting the stage for a decision that will redefine the dinar's role and Iraq's place in the global financial landscape. A term that has entered the lexicon of regional financial commentators and is gaining traction in relation to Iraq's planning is the fifth quarter adjustment. This informal phrase is used by banking insiders to denote a strategic, transitional period that falls outside the rigid boundaries of the typical annual four-quarter fiscal reporting cycle. It describes a carefully chosen window where a central bank might introduce major policy decisions, particularly those related to currency management, systemic restructuring, or rate adjustments, that are too significant or complex to be contained within a regular fiscal quarter. It suggests a high-level, unusual move designed for maximum effect and careful execution. When this specialized phrase became associated with internal Iraqi financial discussions, it immediately captured the attention of market observers, signaling that the Central Bank of Iraq might be contemplating an action of unusual importance. A move described as a fifth quarter adjustment is rarely a minor procedural change. It typically points toward the implementation of a major currency policy restructuring or the execution of a pivotal rate adjustment. designed to be rolled out during a time of minimized reporting friction. The analysis of major economic vectors, including projected oil revenues, foreign investment inflows, digital system rollouts, and the completion of large government contracts, shows an overwhelming amount of activity coalescing around the 2025 timeframe. Therefore, when the fifth quarter adjustment is mentioned, it should be understood as shorthand for a potential strategic window, a period not constrained by the routine calendar, during which Iraq's financial authorities may elect to introduce substantial, non-routine changes to the nation's monetary framework. It implies a conscious decision to operate outside the standard policy schedule, a clear indication that the CBI is planning for something far more significant than a conventional update. This deliberate timing suggests an opportunity to recalibrate the financial system and align the nation's currency structure with its emerging economic reality and long-term national objectives. One of the most persistent and critical pressures driving the need for a structural change is the considerable disparity between the official and parallel market exchange rates of the Iraqi dinar. This ongoing gap is more than a technical annoyance. It is a source of financial stress that ripples through the economy, impacting everything from the daily lives of citizens to the strategic planning of major businesses. Importers face chronic difficulties in securing U.S. dollars at the official rate, leading to supply chain uncertainty. Local businesses struggle to maintain stable pricing amidst constant currency fluctuations, and average Iraqi families ultimately bear the cost through higher prices for essential imported goods. The Central Bank of Iraq is acutely aware that this fragmented dual-rate environment is unsustainable in the long run. The longer this significant gulf persists, the more challenging it becomes for the government and the CBI to maintain public confidence and ensure genuine, long-term economic stability. To address this structural flaw, Iraq has implemented a suite of countermeasures, tightening financial regulations, aggressively rolling out new digital transaction systems, and enhancing coordination with international financial partners. These decisive steps are all aimed at stabilizing the currency, preventing manipulative practices, and reducing the reliance on opaque, cash-based informal channels that breed uncertainty. Consequently, the underlying motivation for a potential 2025 adjustment is deeply rooted in this need for market unification. Iraq's economic stability depends on establishing a single, credible, and stable currency environment. The most effective and perhaps the only path to achieving this unified market structure may be through a decisive official adjustment that actively closes the parallel market gap, thereby steering the entire economy toward a more controlled and transparent financial framework. The current internal pressures are acting as a catalyst for a proactive change, making the case for a significant monetary move highly compelling. Simultaneously, Iraq possesses vast, untapped potential for economic expansion that lends confidence to the central bank's actions. The nation's formidable oil production continues to be a reliable generator of billions in revenue, providing the necessary capital for domestic development. Large-scale infrastructure projects are underway, major international firms are returning to the market, and a nationwide rollout of modern banking and digital payment systems is transforming financial transactions. These developments collectively signify a high level of national ambition, a desire to transition from a historically reactive, event-driven financial model to a proactive, strategically managed one. This transition is being supported by an explicit commitment to improving transparency and enhancing financial monitoring across all sectors. The drive to reduce corruption and streamline governance procedures is a fundamental part of the reform strategy. These foundational improvements are essential for strengthening the country's long-term economic base and simultaneously granting the Central Bank of Iraq a greater degree of autonomy and effectiveness in shaping future monetary policy. The clear alignment of political will with financial modernization efforts creates a powerful momentum that surpasses routine fiscal management. When the strong indicators are taken together, historic reserve levels, acute pressure for a single, stable exchange rate, and massive untapped growth potential, it becomes evident that Iraq is systematically preparing for an economic reset. This is an initiative designed to align the nation's financial structure with its long-term national goals, transcending simple, temporary policy fixes. This integrated approach, which combines foundational financial strength with structural reform, is the primary reason why market analysts and informed observers increasingly anticipate a major monetary decision coming to fruition in 2025. The most anticipated form of this change involves a direct exchange rate shift. While no official confirmation has been made, this remains the most heavily discussed possibility. The central bank could choose to enact a moderate, managed strengthening of the dinar's value, a move that would powerfully signal confidence in the nation's immense foreign reserves and its new economic trajectory. A gradual move from the current peg, often cited around 1,310 dinar per US dollar, toward a stronger number would communicate that Iraq is financially ready to assume a new, more robust position in the international economy. It is crucial to understand that such a move would likely not be a sudden, dramatic overnight revaluation. Instead, financial logic suggests a managed and gradual strengthening process. Central banks are inherently cautious and rarely implement extreme rate changes without extensive preparatory work in the financial environment. A controlled adjustment is the more probable and responsible approach, especially given the government's overriding commitment to stability. Even a small or moderate managed strengthening would immediately impact trade dynamics, import costs, and public finance, requiring careful implementation. The strategic utility of an exchange rate adjustment extends far beyond mere currency valuation. It offers Iraq an opportunity to strategically reduce its dollar dependency, significantly improve the local purchasing power of the dinar, and alleviate inflationary pressures that disproportionately affect the general population. If executed with precision and supported by strong fiscal policy, a well-timed rate adjustment could be a landmark achievement in Iraq's ongoing financial development, marking a clear break from past monetary fragilities and a move toward sovereign economic control. The potential 2025 shift also encompasses structural changes within the Iraqi banking and financial ecosystem itself. The Central Bank of Iraq is increasingly focused on reducing the excessive reliance on the US dollar, which has historically dominated Iraqi trade and business operations, leaving the country susceptible to external shocks. The overarching goal is to foster a more resilient and independent financial system by actively promoting the use of the Iraqi dinar for all domestic transactions and commercial activities, thereby deepening the currency's functional role within its own economy. This domestic structural reform includes issuing clear directives to commercial banks to aggressively expand dinar-based services and accelerate the adoption of digital payment channels. Simultaneously, the CBI has been rigorously enforcing stricter protocols on the flow of foreign currency to enhance transparency and clean up the system. The introduction of new banking policies alongside the 2025 adjustment would serve to create a more balanced financial environment. This internal strengthening is vital for market unification, protecting the dinar's integrity and permanently relieving the pressure caused by the shadow economy of informal currency trading. Beyond strictly monetary and banking policy, the 2025 adjustment window may also be used to launch or accelerate significant fiscal policies at the governmental level. With reserves surpassing the $100 billion benchmark, the nation possesses the fiscal capacity to channel significant investment into productive, non-oil sectors such as agriculture, manufacturing, energy diversification, and emerging technology. Boosting domestic production in these areas reduces the nation's need for imports, which, over time, structurally increases the demand for the local currency and reinforces its strength. Furthermore, this financial momentum provides the perfect opportunity to fund massive, impactful projects, major infrastructure upgrades, ambitious energy diversification initiatives, and comprehensive economic development programs. These targeted investments are designed to be job-creating engines that build long-term growth and fundamentally lower the country's overall financial risk profile. The rare alignment of substantial foreign reserves and a supportive government administration creates a powerful, synergistic economic force that is driving Iraq toward a pivotal moment in 2025. The role of the current political leadership, particularly Prime Minister al-Sudani, is central to this moment. His administration has consistently championed themes of modernization, financial sovereignty, and transparency since taking office. The consistent support for digital reforms, enhanced oversight of revenue collection, and improved coordination across government ministries are not isolated events. The public messaging emphasizes building robust confidence in Iraq's financial future and preparing the economy for the new global realities, suggesting a strong alignment between the executive and the central bank. When the political establishment and the financial authority are united in their strategic vision, the likelihood of implementing major, coordinated change increases dramatically. The timing of this anticipated move perfectly intersects with the launch of large-scale government projects, the formation of new foreign partnerships, and critical oil revenue cycles. All these converging factors reinforce the analysis that Iraq is meticulously preparing for a coordinated financial transition. A major adjustment in 2025 is a logical fit within the broader reform agenda that the government has been pursuing over the past few years. Should Iraq proceed with a significant monetary action, it will inevitably trigger a surge in global interest. A stable, stronger Iraqi economy is a cornerstone for regional stability across the entire Middle East. As a major global oil producer, any measure that reinforces its financial system has predictable and positive ripple effects on global energy markets. Foreign investors from major economic blocs, including Europe, Asia, and the Gulf, have already signaled their intent to participate in Iraq's emerging sectors like logistics, housing, and technology. A more credible and stable dinar would serve as a powerful catalyst for accelerating foreign direct investment. Iraq's strategic geographic position as a vital trade bridge connecting the Gulf, Turkey, and Europe underscores its economic importance. A stronger currency, supported by a reliable and modern banking system, will make international trade easier, faster, and more efficient. Furthermore, global powers with strategic interests in the region, including the United States and China, stand to benefit from financial stability in Baghdad. This international consensus suggests that a carefully managed 2025 adjustment could attract not only significant foreign investment, but also crucial international support and validation. As the window for 2025 approaches, observers should monitor several key indicators. Official central bank announcements are the first and most critical source of information. Although the CBI will never pre-announce a major decision, it often sends subtle, indirect signals through policy statements, technical bulletins, or new banking guidelines. Any mention of comprehensive exchange rate studies, changes to reserve requirements, or new controls on currency flow must be scrutinized closely as they often precede a major move. Another crucial signal to watch is the Iraqi national budget. Budgetary documents often contain latent clues regarding the government's expectations, such as projected exchange rate assumptions or forward-looking spending plans that must align with an expected financial adjustment. If the 2025 budget introduces new financial metrics or planning figures, it could implicitly reveal the CBI direction for monetary policy. Finally, continued upward momentum in foreign reserves, moving substantially beyond the $112 billion mark, is a strong, physical sign that the central bank is building maximum capacity in preparation for a significant currency policy change. For ordinary Iraqi citizens, a successful 2025 adjustment could translate into tangible improvements in daily life. A strengthening dinar or successful banking reforms would likely make essential imported goods, including food, medicine, and electronics, more affordable. Businesses would gain increased confidence and the capacity for long-term planning, as stable currency reduces price volatility and increases the predictability of contracts. A robust economy attracts foreign companies, which, in turn, creates new job opportunities across diverse sectors like construction, energy, and technology. The expansion of digital banking services also means greater financial access and security for the populace. It is equally important to maintain a sober perspective on the inherent risks associated with any major financial undertaking. A fundamental currency policy change will inevitably amplify political pressure, as entrenched interests may resist reforms that threaten existing power structures or profit margins. The possibility of internal friction or market manipulation also remains, as speculation can lead to temporary volatility in the parallel market. Additionally, regional trading partners may react to a financially stronger and more competitive Iraq, potentially leading to adjustments in their own economic agreements. Despite these inevitable challenges, Iraq appears to be moving forward with a spirit of cautious preparation, engaging in coordination with international financial institutions to ensure a stable and orderly process. This methodical approach is designed to mitigate the chance of sudden shocks, supporting a smoother transition into the anticipated adjustment period. The key difference between this moment and previous cycles of speculation is the unprecedented foundation of financial evidence. Massive reserves, systematic digital reforms, and an undeniable alignment between the government's policy goals and the central bank's technical capabilities. Ultimately, the Central Bank of Iraq remains the focal point of the nation's financial future. Its decisions in 2025 hold the potential to shape the country's economic trajectory for the next decade. Should the CBI opt for a gradual, controlled adjustment, the dinar could enter a phase of managed strengthening. Should it prioritize deep structural reforms to reduce dollar dominance, Iraq could achieve a greater degree of financial independence. The convergence of policy action, government alignment, and historic financial reserves suggests that Iraq is not simply talking about reform. It is executing a systemic plan for a transformative financial step. The patterns are speaking clearly. Iraq now stands at a pivotal crossroads. Having navigated years of economic instability and systemic pressure, the nation now possesses the stronger reserves, a clearer leadership vision, and advanced tools necessary to build a truly stable future. A carefully executed 2025 adjustment could unlock sustained, long-term growth, enhance its regional influence, and re-establish profound confidence in the national currency. It represents an opportunity to move definitively away from a dollar-dependent vulnerability toward a stronger, more independent financial structure. Whether this manifests as a new exchange mechanism or a fundamental shift in monetary policy, the fact remains that a major financial shift is coming, and the world is now paying very close attention.